Best investment plans for monthly income. Everyone wants to make the most of their money, and one way to do that is by investing it in a way that will provide you with a monthly income. There are many different types of investment plans available for investors, each with its own set of risks and rewards. When looking for an investment plan that will provide a monthly income, it is important to consider all of the different options and choose the one that is best suited for your individual needs. In the current market scenario, it is very difficult to find safe and profitable investment plans. The best option for monthly income is to invest in equity mutual funds. For a period of 5 years, the average annualized return generated by these funds was around 12%. This is much higher than the returns generated by other investment options available in the market. Some of the other best investment plans for monthly income include dividend-paying stocks, becoming an angel investor, investing in vending machines, and mining cryptocurrency. In this video, I'll show you some investment plans from where you can get started with little upfront cost. So without wasting any time, let's jump right into it. Start investing in dividend stocks. When it comes to making money, there are a lot of ways to skin the cat. You can work for it, save for it, or invest it. Many people view investing as something complicated and beyond their reach, but that doesn't have to be the case. If you're looking to start earning passive income through dividend stocks, this is what you need to know. Dividend stocks are a type of stock that pays out a portion of its earnings to shareholders in the form of cash payments known as dividends. Dividends provide investors with a steady stream of income, and they can be a great way to generate consistent returns on your investment. When you buy a dividend stock, you're essentially buying a piece of the company that will pay you back over time. Dividends can be an important part of your overall investment strategy, and they can help you generate more income from your portfolio. However, it's important to remember that not all dividend stocks are created equal. You need to do your research before investing in any stock, and make sure that the company is healthy and has a history of paying dividends. You can buy dividend stocks just like any other type of stock. You can purchase them through a broker or an online trading platform. How to find good dividend stocks? When looking for a good dividend stock, it is important to look at the company's cost of goods sold and earnings. A company with a high cost of goods sold may not be able to afford to pay dividends. A company that is not making money will not be able to pay dividends. It is also important to look at the company's history of paying dividends. A company that has paid dividends for many years is more likely to continue paying them in the future. Now the question arises, why invest in dividend stocks? Dividend stocks offer investors a number of benefits that can make them attractive choices for their portfolios. The main benefit is the income that these stocks provide. Dividends are payments made by companies to their shareholders from the company's earnings. Companies typically pay out a percentage of their earnings as dividends, and this percentage can vary over time. Some companies increase their dividends each year, while others may cut back or even stop paying dividends altogether. Dividend stocks can also be attractive because they tend to have lower costs than other types of stocks. This is because dividend-paying stocks tend to be more stable and have less volatility than other types of stocks. As a result, they are less risky and may be a better choice for investors who are looking for stability in their portfolio. Next up is becoming an angel investor. Only a small percentage of the population has the means to be an angel investor, but that doesn't mean you can't get involved. Many startups and small businesses need funding, and you can provide it. You don't have to be wealthy to be an angel investor, you just need to be able to identify good opportunities and have the courage to invest your money. There are also ways for regular people to invest in startups without being an angel investor. Platforms like Kickstarter and Indiegogo allow people to donate money in exchange for perks or equity in the company. An angel investor is an affluent individual who provides early-stage funding for a startup company in exchange for convertible debt or ownership equity. Unlike venture capitalists, who typically invest large sums of money in exchange for a significant stake in the company, angel investors usually invest small amounts of money and may take a minority or majority stake in the business. Angel investors earn money by investing in companies that have high potential for growth. In return for their investment, they typically receive a percentage of the company's equity, which can be sold once the business has achieved a certain level of success. Angel investors also receive interest on any outstanding debt they hold, which can provide them with a steady stream of income if the startup is successful. If you're looking for a way to make some extra money or to finance your business, angel investing may be a good option for you. There are a few things you need to know before getting started as an angel investor. First, you need to be comfortable with taking on some risk. Most startups will not be profitable in the early stages, and there is always the possibility that you could lose your investment. Second, you'll need to have some money saved up to invest. Most angels invest their own money rather than borrowing from friends or family. Finally, it's important to do your research before investing in any company. When it comes to angel investing, you need to manage your risks. You can't simply put all of your eggs in one basket and hope for the best. That's a recipe for disaster. Instead, you need to carefully consider the different ways that you can earn money through financing. There are a number of different options available to you, and each has its own set of risks and rewards. Doing your research is essential so that you can make an informed decision about which route is right for you. Remember, there is no such thing as a sure thing in the world of finance. But by managing your risks, you can increase your chances of success while minimizing your potential losses. Invest in vending machines. Vending machines are a great investment for those looking to make some extra cash. Not only are they low maintenance, but they also tend to generate a reliable income stream. Whether you're looking to outfit your office building or place vending machines in high-traffic areas, there's a good chance you can benefit from this type of investment. When choosing which machines to buy, it's important to consider the potential foot traffic in the area and the average purchase size. You'll also want to think about what types of snacks or drinks are most popular in your area. By doing your research, you can ensure that you select machines that will be profitable for you. The cost of a vending machine varies depending on the type and size of the machine. However, the average price is around $2,000. The cost of placing a vending machine in a location also varies, but is typically around $100 to $300 per month. One option is to purchase a used machine for around $1,000 and then find a supplier for the products. Another option is to lease or rent a machine from a vending company. This typically costs between $75 and $150 per month, plus a one-time fee that ranges from $100 to $300. In addition to the initial investment and monthly costs, there is also regular maintenance that needs to be performed on vending machines. This typically costs around $50 to $75 per month. Despite the costs, vending machines are a great way to earn passive income. In order to get started with vending, you'll need to find a reputable supplier. There are many advantages to owning a vending machine. The first is that you can easily earn money from it with little work. All you have to do is fill it with products and collect the money when people purchase items. Additionally, if you finance your vending machine, there is no need to worry about monthly payments or interest rates. This means that you can earn a passive income stream from your vending machine without having to do much work at all. Finally, owning a vending machine is a great way to break into the business world without having to invest too much money or time. In order to answer the question of how much money you can make with a vending machine, it's important to understand some of the basics about them. Namely, what kind of financing is available for purchasing one, and what kind of revenue you can expect to generate from it. Generally speaking, there are two types of vending machines, those that require cash up front, and those that allow customers to purchase items by credit card. The former will require a certain amount of capital in order to purchase it, while the latter will typically have a lower upfront cost. However, the income generated from credit card machines tends to be lower than that generated from cash machines. A vending machine can be a great way to make some extra cash. How much money you can make with a vending machine depends on a few factors, such as the type of machine, the location, and the price of the product. Most machines earn around $100 to $300 per month. However, if you are lucky enough to find a prime location and have a high-priced product, you could potentially make much more. So if you're looking for a way to bring in some extra money, a vending machine might be just what you need. Mining cryptocurrencies. Cryptocurrencies are all the rage right now. As their prices soar, more and more people want to get in on the action. But what are cryptocurrencies, and how do you go about mining them? Cryptocurrencies are digital or virtual tokens that use cryptography to secure their transactions and to control the creation of new units. Bitcoin, the first and most well-known cryptocurrency, was created in 2009. Cryptocurrencies are decentralized, meaning they are not subject to government or financial institution control. This makes them attractive to many people who distrust centralized institutions. Mining is how new cryptocurrencies are created. Miners use special software to solve mathematical problems and verify transactions, thereby earning new coins as a reward. It's a competitive process, so miners need powerful computers and lots of electricity to be successful. Cryptocurrency mining is the process of verifying and committing transactions to the blockchain. This is done by miners, who are rewarded with cryptocurrency for their efforts. In order to be profitable, miners must account for the cost of electricity and hardware. Mining is the process of verifying and adding transactions to the public ledger, known as the blockchain. This process is done by miners, who are rewarded with cryptocurrency for their efforts. There are a few different ways to mine cryptocurrencies. The most common way is to use a computer to solve mathematical problems. When a miner solves a problem, they are rewarded with cryptocurrency. Another way to mine is through cloud mining. With cloud mining, you pay someone else to do the mining for you. Mining can be profitable if done correctly. However, it can also be risky. Before starting mining, it's important to understand what you're getting into. There are two main pieces of hardware that you need in order to mine cryptocurrency: a miner and a power supply. The miner is the device that does the actual mining, while the power supply provides power to the miner. The next step is to get a good mining rig. You can buy a pre-made rig or build your own. For beginners, we recommend buying a pre-made rig. They are more expensive, but they are also easier to set up and use. There are many different types of miners available on the market, so you need to choose one that fits your needs and budget. Some popular miners include Antminer S9S and Avalon SIXS. The last step is to choose mining software. There are many different types of mining software available, but we recommend using Claymore's Dual Ethereum AMD with NVIDIA GPU Miner version 9.7 for Windows. This software is compatible with most graphics cards and it is easy to use. For example, if you want to mine Bitcoin, you will need specialized hardware known as an ASIC miner. However, if you want to mine other cryptocurrencies such as Ethereum or Litecoin, you can use a standard computer or even a smartphone. Now you may ask how to get started. Mining pools are a way for miners to work together to find blocks and share the rewards. They are a great way for new miners to get started because they don't have to compete with experienced miners. Mining pools also allow you to earn money even if your miner finds no blocks. There are a few key things to keep in mind when choosing a mining pool. One is the size of the pool. Pools with more members have a greater chance of finding a block and earning rewards. Another is the payout method. Some pools pay out instantly, while others wait until they have reached a certain threshold. Finally, be sure to research each pool's fees and policies before joining. How to maximize your profits from mining. As cryptocurrencies continue to grow in popularity, mining has become a more and more common way to earn money. However, for those looking to maximize their profits, it's important to have the right knowledge. We will go over some tips on how to get the most out of your mining endeavors. One of the most important things to keep in mind when mining is the cost of your hardware and electricity. Make sure that you are able to cover these costs before you begin mining, as it can be a costly endeavor. In addition, it's important to find a coin that is profitable to mine. You can do this by using a profitability calculator or checking out CoinMarketCap's list of the top 100 coins. You also need to be aware of the current market conditions and adjust your strategy accordingly. Mining during a bull market can be very profitable, while mining during a bear market can be quite unprofitable. Finally, it's important to be patient and stay focused on your goals. The best way to ensure you have a solid financial future is to build a diversified investment portfolio. This means investing in different asset types and industries so that if one sector takes a hit, your other holdings can buoy your overall net worth. There are many ways to invest your money, and the most important thing is to find strategies that fit your risk tolerance and time horizon. For example, you might want to put some money into stocks, which can offer the potential for high returns but also come with more risk, or into bonds, which are less volatile but offer lower returns. You could also consider investing in real estate or venture capital opportunities. No matter what you choose, the key is to keep adding new investments as you save and grow your wealth. By building a diversified portfolio now, you'll be on track for a more secure financial future. Let's wrap up today's video. I wish you all good luck for the next big investment opportunity you get. Do stick around if you want to learn more about finance management and ideas that will get you started in exploring new sources of income. You'll find plenty of content about achieving financial independence here on this channel. Until then, subscribe, like, and share. Bye for now till next time.